Welcome back. Shifting focus now to the auto sector. We are now being joined by Pramod Kumar, the India auto analyst at UBS, to discuss the trends and the road ahead for a lot of these companies. Pramod, good morning. Thank you for joining in. With the kind of results that these companies have reported, you could have may as well assumed that this quarter is going to be a bit of a choppy quarter, considering the GST reforms and then the pause in purchases, and then suddenly the last few days of September seeing this rise in sales. What do you make of the numbers that have come out so far, and have you noticed any outliers within the PVs or the CVs or even the tractors for that matter?
Yeah, I think that's a valid observation. The September quarter has turned out to be reasonably better than what was expected, as companies have navigated the uncertainty around the GST cuts, the implementation, the logistical issues quite well. So to that extent, I think the results have been generally in line. I, of course, won't be making any stock-specific or company-specific comments here, but generally we've seen earnings play out reasonably well, and we see managements being cautiously optimistic on the outlook going forward. And of course, the GST cut has made a big difference to the sector and to the outlook in the near to medium term.
Pramod, hi, morning. This is Rima here. Now, you would have had a conversation with many investors, many OEMs, components. Now, the question is, the GST provided that much needed lift to volumes in the festive season. We've seen that play out in the upcoming numbers. But is it something that's going to last? Will the demand continue to remain strong for the next couple of months? And even on the entry-level side, where we've been struggling now for the last many years, where do you stand on both these two factors?
So I think that's a key debate right now, Rima. Morning. So the stats are that going into the GST cut announcement on 15th August, if you look at the data, two-wheeler industry growth was just around 2% between April to July. This is Vahan retail data. And passenger car industry was marginally negative. So the GST cut couldn't have come at a more opportune time because otherwise we were looking at downgrades to full-year industry forecast. And post-GST cut, of course, the fortunes of the industry has changed. Now, the big question is whether that 25% growth, what we're seeing in two-wheelers since between August to October, or a 6% growth in cars, which we've seen between August to October, sustains as the festive season is behind us and the data has started to settle. And let's not forget that the consumer knows that this is a permanent cut in all likelihood and not a time-bound GST cut. So they have the time and opportunity to come back whenever they want. Now that's the key thing which you are watching on Vahan and with dealer checks or industry checks as to how the post-festive demand is. But what we understand is still too early because there were logistical challenges for many companies to meet the demand in the festive season. So there is going to be a spillover, which will probably help the numbers or dispatches in the month of November. But the real test starts from somewhere like December for two-wheelers and for cars somewhere from January. That's when we will get to know whether the GST bonanza is resulting in a sustained demand uptick. Having said that, if you look at the forecasts which have come from the industry participants on the second half, it's 6% from Maruti Suzuki. For the second half, it's 5% as per Hyundai. And two-wheeler companies are guided anywhere between 6 to 8% as a second half growth, which clearly points to moderations going forward because the growth since August or in October has been very, very robust. So clearly the industry is preparing itself for a moderation in growth, which we believe is led by the fact that they see the data on a first-hand basis in terms of inquiry, conversion, everything. So they are indicating towards a softness or a moderation. But stocks are still pricing in some bit of a momentum continuing. So I think we need to just give it a couple of months before we know for sure which way the demand is headed.
And on entry level?
Entry level, yeah, that's a good question. So that's like $1 billion question right now between cars and two-wheelers, whether the entry level categories which have been kind of losing category share year after years, will they really make a sustained comeback? Festive season typically sees the entry-level segment see some seasonal bounce. So we need to see the bounce in that context. And of course, the GST cut is definitely aiding demand because the category is suffering from two challenges according to us. One is that of affordability and the second one is that of desirability. The affordability is basically the challenge for the first-time buyers who typically have found the product prices shoot up dramatically from 2018 onwards. The average price inflation is like 6-7% versus typically not more than a 1% price inflation, typically what you've seen. And this is in amidst a very weak macro in terms of we had the COVID shock, massive regulatory push on prices because of safety and other emission compliance. Now, those customers who were priced out of the market definitely would use GST as a big windfall to kind of come back in the market. So they're buying. But at the same time, let's not forget, GST makes everything more affordable. And especially if you wanted to buy something which is a better product, then the GST cut makes it more accessible for you. So what we've seen and what we expect is that basically the consumers will trade up. That he will buy something which is better rather than settle for something which is economical. Because the fact is, a car is the biggest commitment what a family makes after a house. A two-wheeler is a reasonably large commitment for many Indians.
Yes.
And typically the ownership cycle is 7 years, 10 years, or even more. So why would I settle for something which I'm going to outgrow in a matter of 2-3 years? So we expect consumer will uptrade, and that's what companies have been generally indicating.
Pramod, that's about the viewpoint from a consumer angle, because the GST cuts have come, it has become cheaper for them to buy it, and it's a long-term commitment. But what from a stockholder viewpoint? Do you think valuations support your thesis? There will be an uptick from even these levels, because Nifty Auto, that index is up 20% this year so far. That's the second highest gains that we have seen in any sector. So what's your thesis on valuations from here on?
Absolutely, that's a very valid point, Rima. And the return this year needs to be also seen in the context of the returns what this sector has generated for the last 3 years. It's been an outrank in terms of outperformance what it has achieved versus other sectors. And valuations are at bare minimum at least 1 SD to 1.5 SD higher than where the stocks have traded historically. Right? So a lot is being priced in. Now we think the GST wave which kind of lifted all boats is kind of behind us. Now it's going to get extremely stock specific. You need to focus on names which have a strong micro, which will help them sustain this demand outperformance and also manage the margins well, because mind you, commodity prices have also started to bottom up. The precious metal basket has moved up, aluminum has moved up, everything barring steel is generally hardening. So we also need to see how the companies navigate the margin trajectory going forward as demand starts to moderate. So we would say this is going to be a bottom-up market. You need to be very particular, and it was the case going into the GST cut. It was extremely stock-specific moves, and the GST cut kind of lifted every stock in the sector. But we expect it's back to micro now going forward, and you need to pick your companies very, very carefully. And we generally prefer companies which are more geared towards premiumization and electrification and scooterization.
Pramod, thank you for sparing time and joining us today. Looking forward to having you more often on the platform. Pramod Kumar of UBS. By the way, 100 points higher now on the index, heading towards the 26,000 mark. It'll take a short break. More on the markets on the other side.